Ladies and gentlemen, good day and welcome to the Vardhman Special Steels Limited Q2 FY26 earnings conference call hosted by Adfactors PR. As a reminder, all participant lines are in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Samruddhi Bare from Adfactors PR Investor Relations team. Thank you, and over to you, ma'am.
Thank you, Sagar. Good afternoon, everyone. On behalf of the entire management, I thank all the participants present on the call and wish you a very warm welcome to our Q2 and H1 FY26 earnings conference call. To guide us through the results today, we have with us the senior management team of Vardhman Special Steels Limited, represented by Mr. Sachit Jain, Chairman and Managing Director, Mr. Sanjeev Singla, Chief Financial Officer, Mr. R.K. Rewari, Executive Director, Soumya Jain, Ms. Soumya Jain, Executive Director, and Mrs. Sonam Dingari, Company Secretary. Before we begin, please note that this conference may contain forward-looking statements about the company, which are based on beliefs, opinions, and expectations of the company as on the date of this call. These statements are not a guarantee of future performance and involve risks and uncertainties that are difficult to predict. We will commence the call with the opening brief by Mr. Sachit Jain, Chairman and Managing Director, followed by the financial highlights from Mr. Sanjeev Singla, Chief Financial Officer of the company. After this, we will open the forum for the Q&A. With that, I will now hand over the call to Mr. Sachit sir to share his opening comments. Over to you, sir.
Thank you. A very good afternoon, ladies and gentlemen. Thank you very much for being with us on our call today. And apologies for postponing the call from last week to today, as our entire all three board members were traveling. Mr. Rewari and Soumya were in Thailand meeting customers, and I was in Chennai again meeting customers. So, last quarter has been a very eventful quarter. One, raw material prices have been trending downwards, and therefore the price reduction also has happened. October also will be a further price reduction because costs have already come down. We'll be discussing with the employees how much is the quantum of the production. Raw material position is quite benign, full availability of raw material. We are not facing any problems anywhere whatsoever. Board, there have been changes in the board. Our chairman, Mr. Rajiv Gupta, stepped down from the board after 3 terms, 2 terms as independent director and 1 term of 3 years as a non-independent director and chairman of the company. Also, Mr. Sanjay Bhattacharya, long board member, stepped down after his 2 terms as independent director ended. In their place, we've had 2 new board members. Mr. Dinkar Gupta, retired NIA Chief of India, as well as retired DGP of Punjab, and Mr. Nishant Arya, a young industrialist in the auto component space, dealing with the major auto components, auto OEs in India, as well as globally. And I have taken over as chairman after Mr. Rajiv Gupta's wonderful term as chairman. The other highlights have been the third renewal of the technical system agreement for 3 years from 1st October 25 to 30th September 28. Now, as you are aware that with IT, our technical agreement is always for a span of 3 years, for a period of 3 years, to be renewed. And some changes are always done based on the requirements of the business at that point in time. Now, for example, the technical parts of the technical assistance have come down. More of marketing support is required, as well as quality support is required to improve quality further for the newer requirements and the most sophisticated requirements of the OEs. As well as we'll be planning for the new project has begun, and IHE's full support is there. So that has also been added to the technical assistance agreement. Now we will have 5 people from IHE posted in India. Earlier we were 3. 1 new person, senior person for quality as well as technical transfer from old unit to new unit, and 1 person for marketing will be joining from 1st of January. So also IHE's increase of stake by 25% signifies much stronger commitment, more than the capital infused. It's the commitment to India and commitment to VSS that is the important part. I was in Japan for the signing of the ceremony. We had very fruitful discussions with our partners, as well as we had a press conference in Japan. For me, first time attending a press conference in Japan regarding our JV. As regards CapEx, the Cox block was successfully commissioned earlier this year, and several production now for almost 7 months. Production has been running. 6 months production has been running successfully. This has been a very, very strong implementation by the Cox team, as well as Danelli and the other machinery manufacturers, as well as our maintenance, erection team and the production teams. As regards the new reheating furnace, which will increase our production, this is getting commissioned by last quarter of this year. So from 1st of April, we will have full impact of the new reheating furnace, which will enable increased production of our rolling mill, which means our job work quantum will start coming down, and therefore the loss of profit on the material that was sent outside for job work will come down substantially from first quarter of next year. The new NAD line is in progress. By June, it should be commissioned. With this, we will have eliminated any limitations as regards making quality for 4-wheelers. As our first NAD line is getting nearer full capacity utilization, it was imperative to get the second NAD line, and that should be commissioned by June as per plan. The other big change that happened last quarter is this new trend towards circular economy, and Maruti Suzuki has been the first company in our knowledge that has taken a concrete steps in this area, where we'll be buying CRC scrap from Maruti plants, and we will make steel and send it back to the vendors of Maruti in a closed loop, which will be traceability of material. So this process started in the month of September. This will strengthen our relationships further with Maruti, and as they go towards the green initiatives and circular economy initiatives, we are there step by step walking along with them. As far as the greenfield steel plant is concerned, we are in the last stages of finalizing our lands, and planning for the plant is going on in full swing in terms of machinery selection, layouts, and machinery configuration, and layouts and specifications of all the machines. All that's going on and going on track. Solar power plant, this was supposed to have been commissioned by June of this year. As we had shared that the transmission line was still incomplete because some farmers had gone to court and stay had been granted. In the last 4 months, all the stays have been vacated, and now all hurdles for completing the transmission line are over. And hopefully, within this month, latest December, the transmission line will be complete, and we should be able to take advantage of the solar power plant, which will also lead to our carbon footprint coming down from 0.72 to about 0.48, and 2, since the solar power is cheaper than the grid power, our power cost will also be lower, which will lead to enhanced margins moving ahead. And we've already shared with you that we have been discussing with our partner IG regarding a new forging line, and we hope to finalize our plans by January. So hopefully in the January phone call, we should be able to share details, timelines, what are we planning to do, investments and all that. That as we had shared in the previous con call, that will take us about 6 months. So we are on track, and hopefully by January, we should be able to share the details of that. The other thing that we have done is we've done a carbon footprint study by DNV. Earlier we had done by CII, but we realized that CII is good as far as Indian customers are concerned. But for global customers, DNV is a more recognized thing, so that has been done. The figures are almost identical with the figures that CII had calculated. So 0.72 and 0.73 was the difference from one to the other. So we are on track with that. And our IT funds have been utilized to repay our WCDL of 150 crore rupees. And the balance funds have been invested in money market funds and liquid funds, which has led to a reduction of finance costs and therefore PAT improvement in the second quarter. I'll pass over the line to Mr. Singla, our CFO, to take you through the numbers, and then we are available for Q&A.
Thank you, sir. Good afternoon, ladies and gentlemen. First of all, I want to share that these quarterly results have been taken from our SAP system, which we have gone live with the latest version of SAP S/4HANA from 1st of July 2025. So all the modules have been taken in this S/4HANA integrated solution. Earlier we were working on two different solutions. One was SAP ECC and module. So it is now one integrated solution, resulting in more strong controls and effective management system. So coming to the numbers, for this quarter, our total sales in terms of quantity is 55,500 tons as against 59,000 tons, resulting in revenue of 432 crores. Year-on-year, 12.64% decline. So it's a combination of both. One is the quantity, which is down by 4,000 tons, and then price reductions, which is continuously happening from last year. Every quarter, the prices are declining because of decrease in the input cost also. So as a result, our EBITDA, including other income, is 56 crores as against 48 crores in the corresponding quarter of last year, 16% increase. EBITDA per ton is 10,000 rupees per ton, and our PAT is 34.5 crores as against 26 crores in the last year. It is proportionately higher than increase in EBITDA because our financial cost has come down because of the funds infusion by IG Steel. And on half-yearly basis, our total revenue for the half year is 865 crores, and EBITDA, total EBITDA is 96 crores, almost same as in the last year. EBITDA per ton is 8,600 rupees per ton, and PAT is 54 crores against 52 crores last year. So that's all on the numbers, and now I request for the question answer session.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and then one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Again, to register for a question, please press star and then one. Our first question comes from the line of Deepak Pandey from Sagun Capital. Please go ahead.
Hi, sir. Congrats on a good set of numbers. Sir, a few questions. Firstly, on the forging plant that we are putting up, can you throw some color on what sort of segmental demand are we looking to cater? Is it going to be focused on auto only?
Yes. As of now, as far as this plant is concerned, we are only in auto, and therefore our forging line that we're looking at will also be focused on auto. And we will be trying to see that if we can make a part that is going into EVs as well. So, but all those are a discussion just now. So beyond this, at this point, we don't have more details to be shared.
All right. Secondly, sir, some light on where do we stand in terms of market share for bright bars in terms of capacity and then the sales volume? And are we seeing any tailwinds currently with the auto sector growing? Any green shoots from the customers?
Yeah. So market share-wise, we will be amongst the smaller players. So there is enough scope for us to grow as we go ahead. But we would be very strong in market share with the high-end customers. So there are customers at the top end where we will be 60 to 70% share of business of some of the key customers. And some of these customers deal with the entire gamut of automakers. So that way, wherever high quality, sophisticated products and reliability is concerned, we would be the customer of the vendor of choice. As regards, and sorry, the other question you had was, so there is enough scope for us to grow. And the second part of the question, can you repeat that, please?
So any green shoots from the clients in terms of auto sector tailwinds that currently we are having?
Yes, so those are signals we are getting that two-wheelers sales, of course, have increased, and therefore demand for two-wheelers will remain good, as well as demand for smaller cars will remain good. This year, the benefit is not too much because the sales were lower initially, waiting for this GST reduction. So the full impact of these changes we hope to get next year. But yes, these are all very positive changes, and I think the government has done its bit in giving the industry a fillip. And overall, there is optimism in everybody that the next financial year volumes should be pretty good.
All right. And sir, in the last earnings call, we mentioned that there is some competition that we are seeing undercutting of prices. Is that still the same, or has it eased up a bit in this quarter?
That continues. And the only way for us to counter that is to continuously improve our quality, get in better products, as well as look internally to reduce costs further. As I said, with this new reheating furnace coming in, we will ourselves see a major cost reduction. One, because of the outside material, which is currently going on job work. The profits that we are passing on to our vendors, we will be able to take those inside, as well as costs of loading, unloading, transportation, and so on. And secondly, with this new reheating furnace coming in, our yields will become better because of two reasons. Our losses on heating and scale loss will come down, as well as losses on end cuts because we're going to have bigger billets. So all told, we're going to see a decent cost reduction, as well as enhanced capacity, because after this reheating furnace, our rolling capacity will hit 270,000 tons of output, which is what our target is.
All right, sir, that's very helpful. So last question would be on the split between bright bars and the black bars for Q2, and any color on the split for FY26 in total.
So a lot of the bright bars were actually going in for exports to the US, not directly from us, but from our customers. And as the U.S. exports have got affected because of the tariff issue, so clearly that has affected our volume in bright bars, and therefore our bright bar volumes are down. If things were normal on the bright bar front, we would have had higher sales this quarter than what we were able to achieve.
Got it, sir. Thank you.
Thank you. Before we take the next question, a reminder to all the participants, you may press star and then 1 to ask a question. Our next question comes from the line of Parth Patel from Patel Investment. Please go ahead.
Hello, am I audible?
Yes, sir, you're audible now. Please go ahead.
Thank you for the opportunity, sir. I just wanted to check that the EBITDA per ton has been improving sequentially. So, for the coming quarters, can you give me a stable EBITDA per ton that we can take into the modeling?
Our declared range was 7,000 to 10,000 rupees a ton. And we have said that from next financial year, we should be upping the range to 8 to 11. So we stand by that as of now.
Okay, got it. And just for the sake of repetition, can you let me know how the Aichi collaboration is going on, and is there going to be any sort of internal technology transfers, and what's the status of land that we were looking?
So the collaboration actually is going very well. That's why we have signed the third agreement. And we have increased the number of people who are posted here. They have invested 385 crore rupees to increase their stake to 25%. So all these are signals that they feel that the partnership is going very well. And in terms of specifics, let me share with you what has changed. Our product quality has improved because of know-how transferred by them. Problem-solving approach has improved. Our understanding of certain specific aspects of quality has improved. The overall culture has improved, and customer acceptability and access has improved significantly. So, for example, the Toyota approval for global operations happened, I would say, only because of their availability. Plus, in all the other ways, they are fully helpful and they are helping us get those approvals. Even some of the other Toyota Group companies, which are tier 1s, which means supplying to other Indian OEs like Tata and Mahindra, those all are coming basically thanks to Aichi. So a lot of support in marketing is coming in. Maruti also, the localization project of Maruti, where we'll be replacing imported steel with steel made at VSS. That project also, I don't think without Aichi support, that project we would have made much headway. So all in all, we are having significant benefits thanks to them.
Got it, sir. And about the land parcel?
Land parcel, we are in the last stages of finalizing. So hopefully by the time we have the next call, we should have the land with us.
Oh, okay, sir. Got it. Thank you so much, and all the best to you.
But please understand, this is land that we are purchasing from farmers. So with the best of intentions, best of plans, sometimes this could get further off because there are a large number of farmers and a large number of landowners. So within each land parcel also, within each family, there could be 2 or 3 family members, somebody may be overseas and so on. It's a slow and tedious process, cumbersome process. And then you have to go through 30-year records of each land parcel. and you need land contiguity, and you need land of a particular length. To put a new rolling mill, we need half a kilometer in length and 300 meters in width. So you need that kind of land parcel also. So all those things have already been seen, and we are in the process of finalizing this land. So hopefully,
we can expect 2 quarters maximum.
Yes, but in all probability, this quarter it should be done.
Okay, sir. Thank you.
Thank you. Our next question comes from the line of Ritvik Sheth from One Up Financial. Please go ahead.
Yeah. Hi, good afternoon.
And sorry, Ritvik, before you raise your question, the timeline of our project completion as of now remains July 29. So that doesn't change with the little longer time it has taken us to get the land. As of now, we are quite committed to July 29 for commissioning of these plants. Yeah, Ritvik, go ahead, please.
Yeah. Hello, good afternoon, sir. So, a few questions. So, firstly, just continuing from the previous
Ritvik, can you be a little louder?
Yeah, is this better? Hello?
Yeah, much better, thank you.
Yeah. So, have you spent anything on the new plant in the current half? Because the capex.
This plant, not for the plant, but we have bought a parcel of land for 50 acres, which then we could not complete further. So yes, we have bought some land, which will be disposed of at the right stage, or we are talking to a couple of forging companies who want to come into India, because a lot of other global companies are also getting very excited with the idea of this kind of steel plant and are examining putting up forging plants near us. So, so for now, we'll keep this land for some more time, that this land parcel can be sold to a prospective forging company. Otherwise, there are other buyers approaching us for this land. So this land that we bought will be disposed of suitably.
Okay. And what is the amount
Apart
that we
from that,
spent?
no other.
Okay. And what is the amount that we spent on this?
So we invested about 70 crores.
Okay, 70 crores. Okay, sure. And so my second question is on the deemed exports for Aichi. So if you can give us the brief color on what was that in H1 and any signs of higher volume going forward?
We haven't shared. No, we haven't shared those figures, what business we're doing with Aichi. But overall, suffice it to say that the exports to Aichi are a bit lower than what we had estimated because of Toyota, Thailand market being subdued. And within Thailand, Toyota sales were also subdued compared to their original plans. And the third factor which came in is the Japanese yen weakened significantly compared to when we started this deal. So yen has moved to 145, 150. So then steel from India is almost as expensive as Japanese steel in Thailand.
Oh, okay.
And on Indian steel, there is a 5% custom duty. So yes, it's taken a little more time. So therefore, seeing that the lifting of product was not up to the mark, we are bringing forward the forging plan to see that the amount of steel that Aichi had said that we'll be able to use from VSS, we will partly make up through the forging business.
Okay, got it. And so a few quarters ago, you had mentioned that we had given material for approval to a European OEM. So any update on that further? How was the first response from their end, and
Yeah,
any signs of any orders coming in?
Feedback is very good. The initial feedback is very good. So They had a further visit again. I had visited Europe this year. They visited us again this year, audited again. They are very happy with the way things are going. They have suggested some technical changes for us to make, which will be made by March of this year, and then we'll be ready. So hopefully next financial year, business should start.
Okay, great. And so this would be on a long-term contract basis, or it would be on a rolling basis? The new orders that
Normally on a rolling basis, I don't think we have any contract with any OE as of now. Businesses are all regulars because they're all repeatable businesses.
Sure, sure. And so just one last question. The recycling that we'll start from procuring scrap from Maruti's scrap plant. Would there be any cost savings for us apart from the synergy and getting new business from Maruti?
No cost savings.
Okay, so scrap would be at market.
Sorry, this is not scrap from their scrapping plant. This is scrap from their manufacturing plant.
Oh, okay, got it.
Scrap that is generated through the manufacturing process.
Okay, sure, got it.
From their scrap plant of Maruti, we are anyway consuming 100% of their scrap that they generate.
Sure. And so, any guidance on volume figures for FY27 and capex figure?
FY27, as of now, we hope to do about 245,000 tons.
Okay. And capex?
I'm sorry? Oh, there is no major capex. The existing capex plan already announced is only the implementation of that.
Okay, for the new greenfield plant, right?
No. New greenfield, we have not announced anything. No plans of investments. This is for the existing plant. We already had announced capex plan. Now that will be only that is ongoing. The major chunks of that were, one, the Cox block, which is done, so no more capex on Cox block. The reheating furnace will also be done by March of this financial year. So again, no further capex on the reheating furnace. And the NT line was announced already. So that will be done by June. So that will be continuing. There will be certain other investments in the R&D lab, EPP plant, and as well as there will be some investments being made in the fume extraction system, including the fume extraction system to handle the increased production. So and marginal capex here and there will be there. But all major capex will be finished in the ensuing financial year. There's no new announcements.
Okay, sir, got it. Thank you and all the best, sir.
Yeah, thank you.
Thank you. Our next question comes from the line of Radha from B&K Securities. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, this quarter, steel prices are down by 11% on a YOY basis. Hence, we can see the benefit of that in the raw material prices. However, the realizations are down only by 3% YOY, which shows that the pricing benefit is not yet passed on to the customers. So will it be passed on in the next quarter, and hence the next quarter gross margins are expected to be lower than this quarter?
So prices will be lower in next quarter than this year. That part is correct. And it would be correct to assume that there's a possibility that the EBITDA margin for third quarter will be a bit lower than second quarter. That part is correct. That's why we always give a range of that rather than a precise amount. So we'll be within the range and there will be a reduction.
Okay. So second question was that what are the extra processes that is required to make bright bars over black bars? Because of these extra processes, what is the incremental EBITDA per ton that is made in bright bars?
So the extra processes is that first we have to straighten the material. Then there is a turning operation, we call it peeling, which is what gives the color, which we call it the bright bar. Then there is settleless grinding after that, and then normally we have an inspection and testing, and then we cut to size and then pack. There is no defined increase. We have not shared what is the increase in EBITDA thanks to bright bar, because there's no way to compute that, because the prices are specific to customers and they're not necessarily linked to the black bar prices, and there's a standard increase in EBITDA because of bright bar. Sometimes it's the cost of being in business, and sometimes it adds to the profitability.
Radha ma'am, does that answer your question? Ma'am, we are not able to hear anything from your line.
We can move to the next question, then she can come back if she has any doubt.
Thank you. A reminder to all the participants, if you wish to register for a question, please press star and then 1. Our next question comes from the line of Meera Mittal, an investor. Please go ahead.
Thank you, sir, for the opportunity. Sir, could you please elaborate on the key growth drivers that you foresee over the next 3 years, like domestic demand revival, export opportunities, any aftermarket segment contributing to your growth strategy?
So overall market growth, because Indian auto still is expected to go up to about 10 million cars, or that's one estimation, or 8 million cars is the other estimation by 2035. So going towards those numbers, the numbers will keep growing with the growth in the economy. So that's one part. Second driver will be some more approvals that are the development process coming in. So that is the second driver. The third driver will be export of components, again coming back, as I said earlier in an earlier question, that in the second quarter we have seen a drop because of drop in exports to the US because of the tariffs. So as they get resolved in the next 3 to 6 months from there, that would be another driver. And lastly, some of the things that have already been approved, they are going to start from sometime next year and beyond. Plus, we were also going a bit slow because we had capacity constraints. After June of next year, those capacity constraints would largely have gone, and therefore we can also little freely produce material. Our service is going to become better. Today we have long lead times because of shortage of rolling capacity. All those problems will get resolved by June, so we should have a better chance to sell. And the other major drivers are going to be green steel. That is very clearly something that most customers are talking about. And circular economy, which we already started in a small way with Maruti Suzuki. So as Maruti Suzuki increases the percentage of business they want to cover under circular economy, that be one driver. Other OEs, they want to start this circular economy. That would be the second driver. And green steel is the third driver.
Okay. Thank you, sir.
We would be the best placed. We would be the best placed among the auto steel companies as regards green steel. The European companies coming to us are coming to us only because we have green steel.
Thank you. Our next question, follow-up question comes from the line of Radha from B&K Securities. Please go ahead. Ma'am, your line is not clear.
Yeah, Radha, go ahead. No.
Sorry to interrupt, but Radha ma'am, your line is not clear.
I can't hear you.
We'll move on to the next question. Our next question comes from the line of Nimish Pandya, an investor. Please go ahead.
Hello, I'm audible.
Yeah,
Yes, sir. Please
go ahead.
Thanks for giving me this opportunity. So basically, I have two questions. My first question is, what portion of your H1 revenue was contributed by the exports? Which regions and product categories were the key drivers of this export growth?
Export is not a very large amount. I think it's about 6 to 7% or 8%. It doesn't change from quarter to quarter.
Right, sir. Okay. So my one second question is, you had earlier mentioned the plans to raise debt for the upcoming plan. When do you expect to complete this debt raising? You had earlier mentioned plans to raise debt for the upcoming plan. Am I audible? Hello.
Yes. So there are no plans of raising debt for now because we have enough equity lying with us. So when we need the cash, as the cash flows are required, so in all probability, the debt will get raised in the year 2027, partly 2026 end, but mostly 2027.
Got it, sir. Got it. Thank you. Thanks a lot.
Thank you.
So as you can see, we plan to keep a conservative balance sheet with the new plant because we have seen many companies who go aggressive on their funding and go on high debt equity and then land up into NCLT and so on. So taking a lesson from that, and as a group, we have a long-term approach, conservative approach. So we will have a lower debt. We have already shared that we will never allow debt equity to go beyond 1:1. Our comfortable figure is 0.75 as the upper end, and target will be around 0.5. So even with this new plant, we expect to be only touching 0.75 for a brief period, if at all, and then coming down quickly to 0.5.
Thank you. Before we take the next question, a reminder to all the participants, you may press star and then 1 to ask a question. Our next question comes from the line of Prateek Dugar from IntelSense. Please go ahead.
Yeah. Am I audible?
Yes, sir, you're audible.
Hello?
Yes, go ahead.
Okay. Yeah. First of all, congratulations to the management for a great set of numbers. And I think a lot of initiative has been taken with the IT partnership to give us a good growth path for the company. I would just like to ask the management, like, what are the sustainable margins that we see for our business? That's the first question.
As you said, from next year, we hope to have between 8,000 to 11,000 rupees EBITDA per ton.
Okay, sir. And do we see, like, right now, I think...
All going well, in the next 2 years after that, we hope to increase it further, but we can't, but that is a hope. 8 to 11, there is a reasonable confidence that we'll be in that range from next year.
Okay, sure. Okay, sir. That's it. Thank you.
Thank you. Our next question comes from the line of Vineet Thakur from Plus 91 Asset Management Company. Please go ahead.
Hi, sir. Good afternoon, sir. Thank you for the opportunity. I'd just like to know the outlook of our industry as a whole. What do you think would be down next 2 years with the green steel demand going up or no? What do you think about that, sir?
Very difficult to predict in the next year or two. But over the next 5-year period, we expect good demand because of all these factors. Year or two, very, very difficult to predict because these are trends which are everybody's talking about. The first action we have seen is from Maruti for the circular economy initiative which we started last month. This is the first initiative from any OE that we have seen. And secondly is the European OEs that are coming to us. That is happening because of green steel. But till the government of India cracks the whip a little bit and gives some targets, very difficult for us to predict when the movement of these green will have an impact. So when I'm saying that we'll be improving our EBITDA per ton to 8 to 11 or a little beyond that, we are not taking any impact of these factors which are beyond our control. If green steel becomes a reality in India and becomes a requirement as it should, then there'll be a massive boost in terms of demand and therefore ability to improve margins. But that is not in our control. That may happen 3 years from now. That may happen 5 years from now. It may just remain talk. We don't know. As of now, what we do here is that there is seriousness towards this.
Okay, sir. Thank you. So I had one more question. So since the government has given the target of 300 million tons by FY2030, do you think how it would affect you positively or like would it have any incremental growth on you, on your revenue or your cost margins?
These questions are more relevant to a JSW or Tata Steel or ArcelorMittal, which are at 40, 50 million, 60 million bigger target. We are a small company. Our target is to reach up to 0.8 million tons.
Okay, sir. Thank you so much.
Thank you. Participants, if you wish to register for a question, please press star and then 1. Our next question comes from the line of Aniket Ratkar, an investor. Please go ahead.
Good afternoon, everyone, and thank you for the opportunity. So, sir, I just want to understand in terms of the strategic outlook, can you throw some light on the reheating furnace upgrade? Hello.
The reheating furnace is a part of the process. We already have a reheating furnace. So basically, when you make steel, it comes out from the caster in the form of billets. Those billets then get cooled down, but you can't roll cold billets. So they have to be heated again. That machine which does the reheating of billets is called a reheating furnace. So we already had a reheating furnace. There were two issues with that. One was it had a smaller capacity, and that was the bottleneck which would not allow us to increase production in our rolling mill. And second, it had a walking hearth furnace, and which leads to some quality issues. So we are moving to a bigger furnace and a walking beam furnace. So which means the quality will improve, which means our rejections and rework costs will come down, and our rejection should also come down. That is one part. And our capacity will go up. And the third, we'll be increasing our billet size from 4.2 meters to 5.2 meters. And both sides of a billet are cut as scrap. So on 4.2 meters, we were cutting out scrap. We'll be cutting out scrap at 5.2 meters, which will reduce the total amount of scrap that we generate internally, and therefore our yield will go up, which will all lead to cost savings. So there is production improvement, quality improvement, and cost reduction, all three aspects.
Okay. So, sir, you were saying the capacity is fully utilized in terms of the reheating furnace upgrade. So, is there any plan to expand the capacity in this?
Yeah, yeah. That's it. That's what I'm saying. With this new reheating furnace, then from 200,000 tons, which is our current capacity, we'll be able to go up to 270,000 tons.
Okay, okay. And sir, in terms of our revenue and the margin. Okay, okay, okay.
I'm sorry?
Got it, sir. Hello?
And therefore, revenue will also improve because we'll be able to produce more material. And two, our margin will go up because our costs will come down with the new reheating furnace.
Okay, okay. Got it, sir. And sir, one last question. In terms of revenue and margin mix, how do you envision that revenue and margin mix evolve by FY28 across our rolling mills and bright bars?
FY28, we expect to hit 270,000 tons, which is our capacity.
Okay.
And EBITDA per ton, 8 to 11, we are quite confident. And then we hope by then we will be able to increase this range from 8 to 11, maybe to 9, maybe 8 to 12 or 9 to 12.
Okay.
So we expect to see a bigger margin, but very difficult to predict so far advanced. So the confidence level as we have is 8 to 11.
Got it, sir. Thank you, sir. Thank you so much from my side.
So if you see the lower end of that, that means 270,000 tons, if they're able to achieve that figure. So 216 crores at the lower end is what the EBITDA should be.
Got it, sir.
On 270,000 tons, it can go up to 300,000 tons, about 300 crores. But I'm saying by then we will be able to give a better forecast as we get closer to that figure.
Got it, sir. Got it. Thank you, sir. This is from my side.
Thank you. Participants, you may press star and then 1 to ask a question. Our next follow-up question comes from the line of Radha from B&K Securities. Please go ahead.
Hi, sir. Am I audible?
Yes,
Yes,
ma'am, you are audible now.
Sir, what is the incremental cost per ton of the extra processes that happens in bright bars over black bars?
We don't share those numbers.
So generally for the industry, how much?
It is 20. I haven't looked at industry numbers, so I don't know. And it's 25, roughly our bright bar is between 20 to 25%, and black bar is about 75 to 80%, roughly.
So last question. In your previous calls, you had indicated that you will start supplying to auto OEs directly. So, sir, actually,
yes,
the products
we already discussed that. I'm sorry?
Yes, sir. So OEs usually buy these.
For gears.
For gears.
For gears. And this is what we discussed a little bit earlier in the call of import substitution. So where the OE was directly importing steel from Japan, that steel is likely to come to us. So that approval process has been done. Now the question is, they have to take a decision when will they do the shift over, the switching over.
Understood, sir. Thanks and all the best to you.
And this will be the first case where we supply directly to an OE. Otherwise, normally we supply to tier 1s or sometimes tier 2s.
Mm-hmm. Yes, sir. Thank you and all the best to you.
Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Ladies and gentlemen, thank you so much for having interest in our company. One thing which is very interesting for us is that since I came to this business in 2010, we have been continuously investing in this plant. Now, thanks to those continuous investments, we have reached from 50,000 tons of production. We hope to reach 270,000 tons of capacity by next year and filling up the capacity in 2 to 3 years. After this, we should hopefully end our capex cycle as far as this plant is concerned. There is one idea which we are working on, which is if we can go even beyond this capacity levels. But that idea, once we are able to test it out, then we will share that may require further capex. But that is only if this idea works out. Otherwise, as far as we are concerned, this plant is now largely done. The future capex will largely go into the new plant and the forging business. The announcement of the forging business will happen by Jan. And as of now, the target commissioning of the forging line is also before July 29. So both these things which will happen simultaneously, the forging line as well as the new plant should happen simultaneously. But we'll have more details when we have our January con call. So thank you very much, and we look forward to your remaining with us as we continue on this journey. Thank you.
Thank you. On behalf of Adfactors PR, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.